Hi, welcome back to another session on financial statement analysis. In the last session, we have already seen how we can analyze and interpret the financial statement of a company. So, financial statement means it consists of P&L account and balance sheet. And the last session, we have seen how we can analyze and interpret this balance sheet of a company with the help of comparative analysis. And in this session, we will see how we can analyze and interpret the income statement of a company. Income statement means what? The P&L account of a company. So the P&L account or income statement of a company that shows the operations of a business. That means whether this business is profitable or not. Okay, so this is what we can obtain from the income statement of a company. So generally it is done to analyze the profitability position of the business, and at the same time balance sheet shows the financial position of a concern on a particular date. So just like comparative balance sheet, the income statement also has 4 columns. Okay, the first 2 columns gives the figure of various items for 2 years. So the first column is all about particulars. Then second column shows the figure of 2 years items. Okay, and the next column it shows the increase or decrease in absolute figures. It shows in that figure, and last column shows the percentage. Okay, just the same format of our comparative balance sheet. And now we will see how we can interpret the income statement of a company while we are doing the same with the comparative income statement. So mainly 3 items are being analyzed and interpreted in the case of income statement. The one is gross profit of a company. Then second one is the operational profit of a company. Then third one is the net profit of a company. And in the last case, we will say an overall opinion about the financial position of a company. So this is how we need to interpret the income statement of a company. Okay, 3 items. Gross profit is the first one, operational profit is the second one, and net profit is the third one. And in last we can say, okay, the overall financial position of a company, sorry, not the financial position, the profitability position of a company is good, bad, favorable, unfavorable. So in that way you can comment. Okay. Then first one is how we can interpret this gross profit. We know that how we will get the gross profit. From sales less cost of goods sold gives the figure of what? Gross profit. Right. So in first thing that you need to calculate is you need to identify the sales, it will be given. Then cost of goods sold, it will be given. You just need to deduct that and you will get the figure of gross profit. And you just need to compare that. If the amount of cost of goods sold is more than that of sales, what happened? Automatically the gross profit will be decreased. But at the same time, if the sales figure is more than that of cost of goods sold, then what happened? The gross profit will increase. So if sales is more than cost of goods sold, then what? Gross profit will be increased. And if sales is less than cost of goods sold, then what happened? The gross profit will be decreased. So this is how you can analyze and interpret the gross profit position of a company. Okay. Then next thing that you need to calculate or you need to identify is the operational profit of a company. Now we will see how we can calculate that. Okay, so in the first step we got what? The gross profit we have already calculated. And from this gross profit you need to deduct what? The operating expense of a company. Okay, operating expense. And operating expense include like office and administrative expense, selling and distribution expense. So this kind of expenses should be deducted. Then you will get what? You will get the operating profit of a company. Okay, so the figure of operating profit is influenced by what? The operating expenses. If the amount of operating expenses increased, then what happened? That will result in the deduction of operating profit, because from gross profit we deduct the operating expense and from there we will get the figure of operating profit. Okay, so this is how you need to interpret the operating profit of a company. Then from this operating profit, what all things we will deduct? We will deduct the non-operating expense. Non-operating expense. And non-operating expenses like interest paid, then loss from sale of asset, writing of a deferred expense, payment of tax, etc. So this kind of non-operating expenses will be deducted, and if we have any kind of operating incomes, okay, then what? You need to add that non-operating income. Okay, it is non-operating income you need to add. Then what? Finally you will get the net profit after tax. Okay, so this is how we will get the figure of net profit. And here also, if the non-operating expenses is increased, and also if the payment of tax, that also if it is increased, then automatically what happened? That will result in the degrees of net profit. Okay, and finally you can comment on the overall profitability position of the concern. Okay, remember that in P&L account, we are analyzing the profitability position of a concern, and in the case of balance sheet, we are analyzing the financial position of a concern. Okay, now we will see how we can work out a problem. So here one question is given. Okay, 2 years, 2010 and 2011. Figures has been given. Here sales is 120% of cost of goods sold, and in 2011 it is 150% of the cost of goods sold. And here the cost of goods sold amount has been given. So you just need to calculate the amount of sales. So okay, so this is the format of comparative income statement. Okay, here you need to write the comparative income statement. Right, the comparative income statement of a company for the year ending for the year 2010 and 2011. Okay, so this should be the heading. Then you need to, the first column is all about particulars, second column is all about the first year figure, then second year's figure, then it is all about absolute change and the absolute change, whether it is increase or decrease, then the percentage. So cost of goods sold amount is already given in the question, that is 20 and 25 lakh. So you need to calculate sales. So the here hint is given that it is the 120% of the cost of goods sold. So cost of goods sold is 20 lakh. So 20 lakh into 120% gives the figure of sales, and that will be 24 lakh. Okay, that means 20 lakh into 120 divided by 100 gives the figure of sales. And in the 2011 it is 150% of 25 lakh. That means it is 37 lakh 50,000. Then we just need to compare the figures. So from 2011 you need to compare what? 2010. That means in the year of 2010 the sales was 24 lakh, but when it comes to 2011 it is increased by 13 lakh 50,000, right? So we will write the absolute change as increase of 13 lakh 50,000. And now you need to calculate the percentage. How we can calculate the percentage? That is 13 lakh 50,000 divided by the base year 24 lakh into 100, and that gives the figure of 56.25. Okay, so just like that, you need to calculate the cost of goods sold. Sorry, here the cost of goods sold is 25 lakh. So there is an increase of 5 lakh has happened, and the absolute percentage change is 25. Then you need to calculate the gross profit. And how we can calculate gross profit? Sales minus cost of goods sold gives the gross profit. So that is, here is, it is 4 lakh, and here it is 12 lakh 50,000. And what is the absolute increase happen here? It is 8 lakh 50,000. And what is the percentage change here? It is 212.5 is the percentage change. So from here you need to deduct what? Indirect expense. So here indirect expense is not given directly, but it says it is the 10% of gross profit. So here gross profit is 4 lakh. So the 10% of 4 lakh means what? 40,000. And here 12 lakh 50,000. The 10% is all about 1,25,000, right? It is 1.25 lakh. Okay. And what is the absolute increase is that mean happened here? It is 85,000 increase is being happened. And what is the percentage here? It is 212.5. So from gross profit, when we deduct indirect expense, you will get the figure of profit before tax, because it is given, you need to calculate the rate of tax also been given. So now you will get the figure of profit before tax. Okay. And what is that amount? It is 3,60,000, and here it is 11,25,000. And what is the absolute increase or decrease happen here? Here it is an absolute increase is being happened, that is 7,65,000, and the percentage here is also 212.5. Okay, so from here you need to calculate what? The income tax rate you need to calculate. So 50% is the income tax rate is been given. So you need to calculate the 50% of this 3,60,000 and all. So that is 50% of 3,60,000 is the 1,80,000, and here it is 50% of 11,25,000 is the 5,62,500. And you need to compare both. So there is an increase of 3,82,500, and the percentage change here also it is 212.5. Then finally you need to calculate the net profit after tax. That means you need to deduct this income tax amount from the profit before tax. So here that is the same amount, that is 1,80,000, and here it is 5,62,500, and there is an absolute increase of 3,82,500, and the percentage change here is the 212.5. Okay, so after completing the calculation, what you need to do? You need to interpret the result. So you can compare the result of gross profit, you need to compare. Here there is no mention about the operating profit because operating expense is not given, so you don't want to compare about that. Then after that you need to compare about what? Net profit after tax. So this amount you need to calculate, interpret. But overall analysis, you can carry out the analysis based on this given hints. Okay, I'm not giving that into detail because the length of video will be gone much. Okay, so but you can make the comparison or analysis by using this hints, like the guidelines for interpreting the income statement. Okay, now we will see another type of analysis in financial statement that we can carry out, that is the trend analysis. Okay, so comparative statement analysis is one, then second one is the trend analysis. I hope you remember our first session. The methods or device of financial statement analysis. There are different methods or device are there. First one is comparative statement, and in comparative statement we have seen the income statement and balance sheet of a company with the help of comparative statement. Okay, the second type of method or a device for carry out the financial analysis is the trend analysis. Okay, that is what now we are going to discuss about. And in the last module we have already seen how we can carry out the financial statement analysis with the help of ratios. It is already covered, and now we are moving to the trend analysis part. Okay, so trend analysis, this is a method that determines the direction of upward or downward, and it involves the computation of the percentage relationship that each statement items bears to the item in the base year. So in simply, if we say certain items are given, like if we want to calculate the trend of sales, or if we want to calculate the trend of gross profit over several years, or if you want to calculate the trend of operating profit for several years, or if you want to calculate the trend of like any other items like net profit, or the trend of any particular expense, so this kind of analysis you can done with the help of trend analysis. Okay, the only thing that we need to remember here is we need to take 1 year as base year. Okay, suppose if you are comparing some trend of, okay, here it is one example is given. Suppose if you are going to study about the sales trend from 2003 to 2008, what is the position or not position, what is the trend that is showing in the sales position of a company, that we are going to study about. Okay, so and we have identified the sales of company during 2003, 4, 5, 6, 7 and 8, and we are calculating the trend. So the first step is we need to take 1 year as the base year. Okay, so normally we will take the first year as the base year. For example, suppose if you are calculating the trend from 2010 to 2015, then this 2010 figure will be taken as the base year. Okay, and we will calculate the items with the other year's items will be compared with the base year item. Okay, this is how we will calculate the trend. And here I have mentioned the procedure for calculating the trend, that is 1 year is taken as the base year, and generally the first year or the last year is taken as the base year. Normally we will take the first year as the base year. Then figure of base year is taken as 100. Okay, that is the second step. Then in the third step, what we will do, the trend percentage is calculated in relation to the base year. Okay, and based on this we will say whether this trend is increasing or decreasing. We will work out one problem, and from that you will get an idea about how we can calculate this trend of certain item. Okay, so this question is all about 3 items are given, like sales is given, stock is given, and profit before tax is given, and the items year is taken from 2004 to 2008. So we are going to calculate what is the trend of sales from 2004 to 2008, whether it shows an upward trend or whether it shows an downward trend. Upward trend means it is keep on increasing, the sales position is keep on increasing, and downward means it keep on decreasing. And just like that, we are going to calculate what is the stock trend from 2004 to 2008, whether the stock trend is increasing or decreasing. Just like that, we will calculate the profit before tax. Then also we can calculate, like you can calculate net profit trend, you can calculate operating profit trend, you can calculate. Okay, in similar way you can calculate all these items. And now we will see how we can work out this. Okay, so this is a format of calculating this trend item. First we will write the particulars as given in the question. It is same as question, right? Okay, so it is given, it is 2004, the sales is 1881. We will write the same figure here. It is all figures are mentioned in lakhs. Okay, that you need to remember. Then 2005, it is given as the same figure. So the same thing that we write in the first columns of each item. Then after that, what we need to do? We need to calculate the trend. As I said earlier, the first year will be taken as base year. Here 2004 is taken as our base year, and in connection with this base year we are going to calculate other items. So in the case of stock, the first year, 2004 year is taken as the base year, and its trend is mentioned in the 100. Okay, that is same for all the cases. In sales, the first year figure is taken as base and the trend is mentioned as 100, and for stock the base year and figure is taken here and the trend is 100 here, and for profit before tax is 321 is taken as base and the trend is also given as 100. Okay, and based on this we are going to calculate the figures or trend for the coming years. Then how we can calculate for this 2000? Okay, for 2005, how you can calculate the sales trend? That is, so what is the sales position? It is 2340 divided by base year, that is 1881 into 100. That gives the figure over here. And what is the percentage of that trend? It is 124. So it is increased. In 2004 it was 100 and in 2005 it keep on increasing, that is 124. And for 2006, how you can calculate? The sales is 2655 divided by base year into 100. Then what is that figure? It shows as 141. So here also it is increasing. So in the same way you can calculate the trend percentage here. Okay, so if you analyze the sales thing, it is keep on increasing. Right, from 2004 to 2008 it is keep on increasing. So just like that you can calculate the stock also. So here the first year is taken as base and its trend is taken as 100, and for 2005 how you can calculate? 781 divided by base year figure, that is 709 into 100. And what is that figure? It is 110. And how we can calculate for 2006? It is 816 divided by base year into 100, and it shows what? It is all about 1115. So it is 110, it is 1115. So just like that you can calculate for the coming year also. Okay, and when you analyze this, you can see that it keep on increasing, but in coming to 2008, there is a remarkable increase happened, right? 2007 it was 133, and from that it is increased to 162. So there is a huge increase in the stock position of a company. So just like that, you can calculate profit before tax trend also. The base year is the particular year divided by base year into 100. This is the equation for calculating the trend. Okay, the particular year means 2005, 6, 7, 8, and base year means what is the year you taken as base. So in this question we have taken 2004 as the base year and into 100. Just like that you can calculate the trend percent. Okay, this is how we can calculate trend analysis of a company. Hope this is clear to you. You can work out some of the practical problem and you can go through this analysis part also. It is very simple. You just look on the figures whether it is increasing or decreasing. So in that way you can interpret the same. Okay, thank you.